In this series, lowimpact.org talks with people working to build a mutually owned, democratic, decentralised economy that builds community and doesn't destroy nature. We want to increase collaboration to bring about system change. Find links to the sites mentioned in the videos in the description below. Join the conversation by liking, commenting and subscribing to our channel.
Welcome to the Low Impact TV podcast. Today I am talking with Hans-Florian Hoyer, who is a retired academic who specialises in the history of credit clearing, especially credit clearing at medieval trade fairs. We've recently added an introduction to credit clearing to the Low Impact site, and I'll put a link to that in the description. Welcome, Hans-Florian.
Welcome, David.
Nice to have you here.
It's all my pleasure.
I think credit clearing is a crucial part of building a new commons economy because it reduces the need for money and banks in communities, and it helps small businesses survive through difficult times, which there seem to be a lot of nowadays. I really want to talk with you about the history of credit clearing, but first tell us a bit about yourself, about your career and how you got into the subject of credit clearing.
Yeah, I'd like to do that. Let me add, I'm not a retired academic, I'm a retired banker.
Okay.
I worked at 25 years in the first social ecological bank in Europe, at least, or maybe worldwide. It was founded in 1974 by anthroposophists. Anthroposophists are the ones the Waldorf schools come from.
Yeah.
It was a bank, and it was a bank for communities. It is called Gemeinschaftsbank, which means bank for community, Gemeinschaft. And for example, we had communities around a biological dynamical farm that needed a new barn or a bakery or whatever. That's when crowdfunding, by the way, was invented. The community could band together. Each person said, I guarantee for 5,000 marks. This was a threshold where you didn't need to have much paperwork to do it. Everybody was good for 5,000 marks at these times.
And hang on, when was this?
74.
1974, and that was the sort of the beginnings of crowdfunding.
Yes.
Oh, okay.
It was the idea of one of the founders. He said, okay, everybody is valid for 5,000 marks. If we have 20 people, that makes 100,000 marks. And the bank thus had a security to give out the loan. And maybe even more than 100,000 marks. Lots of schools have been financed, Waldorf schools have been financed in that way, and lots of biological dynamic farms too.
Yeah.
And then the credit was given out, and then they paid it back, and everything was fine. I myself was engaged in such a crowdfunding for the Waldorf school in Nairobi, for a biological dynamic farm, and for imprinting agency in Moscow, but this failed. I had to pay. Yes.
Well, you were also an associate professor, weren't you?
Yes. Yes, I studied engineering, architecture in Stuttgart.
Right.
And there was one professor who at that time invented most, together with his colleagues in Berkeley, invented most of the features which design thinking today has. His name is Horst Rittel. Unfortunately, he died. And
R-I-T-T-E-R.
Yes.
Horst Rittel.
And no, L at the end.
Rittel. Okay.
Rittel. Yeah, you have Wikipedia entries in German and even also in English. And one of his inventions was the wicked problems. So tame problems are solve this Sudoku. It's the rules are clear, and everybody can see whether you succeed on it, even your biggest enemy.
Yeah.
And wicked problems is you don't know the rules yet.
No.
You don't know how to do it, and it's a one-shot operation. You can't repeat it, and so And then I was at him as a student. And then after making my diploma with him on fire safety in high-rise buildings, and then I became assistant professor at his chair.
Right.
For 6 years or so.
And so you didn't really get into the credit clearing until you were working at the bank?
Yes, and it is, first I started to write programs for architects and engineers as a freelance writer, and 4 engineers bought a computer for me, a digital equipment PDP-11, the size of a small refrigerator, for 50,000 marks, and that we want 1 program each year from you. And I did that. And when I was in Stuttgart at that time, and when I changed to the Ruhr Valley, where my father lived, the CEO of the bank in Stuttgart told me, go to Bochum, visit the CEO of the other CEO, because he bought himself a personal computer. He needs help. And then, so that's the way I got started in the bank. And in my late 40s, I even made a banking apprenticeship. So I can say I'm a banker.
Okay. And yes, tell us why you became interested in credit clearing. What's so good about credit clearing?
Yes, the credit clearing. Or let me first say that I did not really understand what money creation is, although I worked in a bank. I was in the back office of the bank, and I had all these supervision things to do. And I saw the accounts, and they talked about, if somebody makes a deposit in the bank, he can choose whether the money should be used in agriculture or in medicine or in schools or whatever. And I believed in that, but you can't believe that, because banks cannot lend out deposits of savers. That's quite clear.
Yeah.
But they need them. For other reasons. And after the financial crisis, I more and more woke up and asked what is happening here. And when I retired 10 years ago, I started to read about money. And what I wanted to do is to find something like the periodical system of elements, which orders all these diverse stuff into a system. And
so you didn't really start to understand about money until you stopped being a banker?
Yeah, shortly before. Shortly before. But this is a typical biography. There are still bankers out of there who don't know what they do when they do it.
I've spoken with them.
Yeah. So when I went into the history, I felt like coming into a zoological garden. You see, there you have the different cages and different animals in there, and in the money animals, there are cowrie shells and iron axes and bullions and coins and big stones, and corn, grains, and paper, various papers, and even an empty cage. And every cage has the label money on it, and you can work with that. So one of my emphasis is to clear the concepts.
Yeah.
Money in Germany is Geld. It's a four-letter thing. And I said, Geld is a 4-letter word. You need to say which money you're talking about.
Geld also means gold, doesn't it?
Yeah, Geld means gold, or to be valid, gelten.
So, yeah, tell us more about your explorations into the money system then, and especially about credit clearing.
Yeah, then I got involved about thinking what would be appropriate kind of money for the society of the future. So and as I'm an anthroposophist myself, I also looked what did Rudolf Steiner write on that, and 101 years ago he gave a course on political economy, and he had ideas about money too, and so and
I didn't know that he wrote about money.
Yes.
I read. Yeah, I don't know whether I should tell you this. I read some things by Rudolf Steiner and I wasn't very impressed. It was animals evolving from humans.
Yes. It's
the center of the sun was hollow, and what else was it? Another one was quite dodgy. It was your spiritual development. It sort of depends on the color of your skin.
Oh no.
And the lighter your skin, the greater your spiritual development.
No.
I read it.
Yeah. But you always have to look at the context. And believe me, I would not be an anthroposophist if Steiner was something like a racist or.
No, I'm not saying he was a racist, but and obviously, time has moved on, and nobody believes those things anymore. But he said some things that I found quite difficult to read.
I fully understand that, and it's for me it's still so. If I read the same text another time, I always say, why didn't I understand that when I read it first?
Yeah.
So the core of anthroposophy is the I, not the I, but the ego, but not in the sense of egoistic. And this is a personality which develops, and it's completely independent of the color of the skin. It's only the color of the skin is something like an instrument. The player on an oboe plays differently than on a clarinet, and so the color of the skin is the difference between the clarinet and the oboe. Mm-hmm. So if you look at anthroposophy and the cultural the cultural factor which it is, you find only good things beside the schools. You find medicine. You find banking, you find farms, you find medicaments, you find cosmetics, Veleda and so on. And you couldn't develop this on a racist basis.
No, it was just one thing I read. But so Steiner was influential in the beginnings of your exploration of money.
Yes, this is because Steiner thinks many things the other way around, and this is giving food to your synapses in your brain.
Yeah,
and to think the common ideas of money in a different way always gives new perspectives. And in that sense, I like to read Steiner and got very much. Perspectives on money and on making business together.
Yeah. What were the big breakthroughs that you made to change your understanding about the nature of money?
Well, the one thing is that money is a piece of right. It's the right to claim something from somebody else. It's no longer the handling over of a token. But most of the people still think in tokens, and this is one of the problems. As long as the broad population thinks in tokens, they are in the hands of the ones who know how it works really, and they can be exploited in any manner. So I discovered that people still think in coins, although this is not more appropriate in credit economies.
Yeah,
and they still think in coins because they feel that it's too complicated to think how it is really. And they are right in thinking that because the financial industry or the financial sector, they use vocabulary which you cannot really understand, and which was kind of a reason for the banking catastrophe in 2008, because not even bankers understood what some specialists cooked together to make more money out of money.
Yeah, yeah.
So and I think one of my aims is to educate people, to tell them how it is really. And normally, if I explain a friend that money, there is no money on your account, you only have the right that the bank pays for you. He said, no, that's too complicated. I said, no, it's not complicated. I can explain it to you. Then they say, oh, I don't want to know it. As long as it works, I don't want to understand it. So this is quite a difficulty. And on the other hand, I read so much stories about money, which are very funny. And it's always about people who wanting to solve a problem and found a solution and went on with the solution. And then they came up to new problems and started to develop new solutions. And this is the co-evolution of money and civilization, which I think. And money is not an invention of one person, but it's a co-creation of all the people which made business together, which made economy for the needs of the others.
What's the main thing you wish people understood about money?
Yeah, that is not connected to any intrinsic value which you barter. The concept of value is complicated. Not complicated, is important, and it's comparable to the concept of distance. Nobody would ask, what intrinsic distance has London? Yeah. To where? Huh? Yeah. And this is the same with value. You have value is always a comparison between two things, and so there is no intrinsic value. There is, for example, they in the literature they discussed why is the pearl so expensive. And then they said, because a diver has to go down, and there's a great danger, and there's a great effort to bring the value up, the pearl up. And then another one asked, what about if he brought a little stone up? The same danger, the same effort. Yeah. What is it? So it's nothing intrinsic. It's always something you comparable to do with others.
Yeah.
And what people must understand is that there is no, since Nixon stopped the gold, there is no material.
1971.
Yeah, no material value backing anything. Yeah. And this arises the question, what do we owe each other when we hand over money? And this is a societal question. This throws us back to ourselves as society, even as mankind.
Yeah. So where does credit clearing come in? What's so good about credit clearing? What problem does it solve?
Of course, I looked into the so-called social media. I looked where are other people engaged in the same question, and so I found the group around Dill and Tom,
mutual credit services
and Thomas Fleischmann
Society.
And I saw what they did, and I said, okay, that's fine. I'm ready here, and I started to work with them and started to think about it, and started to look at the problems as they did it, and I could provide them with some historical facts which they did not yet have. And this was there the medieval trade fairs came in, where the merchants coming from Upper Italy and going to France and to buy fabric, to make clothing and sell it in Italy.
Yes. Was it just between Italy and France? Was it just textiles?
No. Everybody from Europe, even the English came there to sell their stuff. What is it?
Textiles. The cloth.
Textiles. They had their famous textiles, and the
wool.
Italians, and the Italians wanted to buy it, and there were different things which they exchanged, and they all had to make a surface journey through woods, and they would hate to take gold coins with them
because of bandits.
And then they first invented the bill of exchange.
Mm-hmm.
They had a partner in France, and they had a partner in Italy, and they said, okay, to the partner in Italy, you make the partner in France pay me there so and so much money. And this in the same was a way to circumvent the ban on interest.
Yeah.
So
so just to explain, there was a Christianity. Europe was a Christian continent, and
yes,
you weren't allowed to charge interest.
And the Pope would have excommunicated you from the church if you took interest. And so because they had the Italian coins here and the French coins there, and they had to change them, and they hid the interest in the mathematics of changing.
So you had to put money in a bank in your own country, which had a branch in the other country?
Yeah, they had a partner. There were no partner in the other bank, and then it was always a vice versa. It went forth and back, and then they started only to calculate. And and then when they came, they only took that much money to the fair to pay for the hotel and for the burgers. And then they had a book where they wrote everything which they bought and which they sold, and they only wrote it down. And then when the trade was ended, the authority, the local authority, said no more trade now. Let's meet to consolidate. Then they looked for their partners and consolidate bilaterally. And
just,
there was
just with each other, but not
with each other, not with. And then there was no net. But when there was money left, for example, I still owe you 50 francs or something like that. Then I could ask you, whom do you owe, or who owes you money? And then I could pay him instead of you. And this was called delegation. Or they could look for circles and clear circles. If A owes B, owes C, owes D, owes A, they could eliminate the smallest amount.
So credit clearing solves the problem that was caused by people like Robin Hood.
I don't understand what that is.
Robin Hood.
Because he was in the woods.
Yes, in the woods, who would steal from the rich and give to the poor. So credit clearing sort of.
No, I don't think he was in England, and the credit clearing took place in France.
Yes, okay. But people didn't want to travel in those days with anything valuable, with coins or bills or gold or
And they even didn't want to travel back with coins, so they tried to eliminate most of the coins. And when they had reasonable amounts left, they wrote a bill for the next trade fair.
Right.
They put it on paper.
Right. Okay. So the money stayed in the country there. Yeah. Okay.
Yeah. And this was called compensation if it is between two persons, and it was called scontration if it is between three and more.
Okay. Scontration. SCONTRATION. Scontration.
Yes, scontration. Yes.
Credit clearing between more than two.
Yes.
Okay.
And
So what's happened to that word? That word has disappeared.
Yeah, it disappeared because nobody does it anymore. We call it clearing now.
Yeah, okay.
And
why was it called scontration then? Why wasn't it called clearing then?
I wasn't there at that time.
Okay. So where does it all start? Was the medieval trade fairs, was that the earliest example of credit clearing in history?
This was the earliest example of credit clearing of 3 or more.
Right. Okay.
The bilateral compensation started earlier. It's a private thing between 2 merchants. They say, today I pay you 100, tomorrow you pay me 100. What the heck? Let's write it down, and after a month, look who pays whom. It's a normal thing between 2 merchants.
Okay.
And this was in effect earlier than the trade fairs.
Right. Okay. So at the trade fairs, who were these scontrators? Who? What were they called? How did they operate? Where did they come from?
It was the merchants. The merchant did it themselves. They did it themselves, and they had for example, they had the right shoulder is I owe him, left shoulder he owes me, and they stood there and looked for circles or looked for chains which could.
What physically they did it with their
physically
bodies.
they did it. Yes.
So that they could see, I owe him. So that you if you make a circle,
yeah,
that's good because we can clear it.
Mm-hmm. And this could take 2 or 3 or a week, 3 days or a week. And
at the end of the fair.
At the end of the fair, yes.
They could have to stay there for another week or two to
yes. And then in Lyon, town in France, south of France, they had specialists who were trained to get this information out of the books. They handed them over the books, and the specialists.
Where did these people come from? How were they introduced to this? Were they from the banks or?
They were money changers.
They were just money changers. Okay.
The people who were accustomed to change to handle money, and money changers had to calculate.
Yeah. Okay, so how long did this go on for? What happened to them? How did it develop? How did it grow? What happened?
Yeah, this was stopped when the fairs changed to being master fairs. So they didn't trade.
They changed to being
on
what?
The spot,
they changed to being what?
Sample fairs. They only came with samples, and they said, okay, from that sample, please deliver me to Italy from your home.
Okay, so they didn't buy and sell it.
They didn't. Yeah, they didn't exchange it, and so they didn't have to pay there. It was also when the ocean was found as a place where trade takes place, and
so the medieval trade fairs. What time period are we looking at?
1200 to 1400 or something like
1200 to 1400. Okay,
so
very early.
Yeah, very early. And then when the ocean was conquered, the center of the world trade went to the coasts.
Mm-hmm. Right.
And for example, before London became the center, it was Amsterdam.
Amsterdam, yeah.
Mm-hmm. And in Amsterdam, there's the problem always was there are not enough coins.
Mm-hmm.
Well, this is a continuing problem all over the Middle Ages. And an Austrian writer, Nestroy, he said, "Oh, the Phoenicians invented the money. Why did they invent it so few? They didn't invent enough of it." Okay, so this was a continuous problem, and in this and every coinage was a local currency.
Right.
It was a local currency, and when traders came from
how local?
No, it was you had the coins in Spain, you had the coins in France, you had the coins in Italy. Even towns had their coins, and where the sovereign was, he issued the coins.
Mm-hmm.
And Amsterdam people, they solved it by saying, okay, we invent a coin which is a virtual coin, which is only defined by the gold or silver which is on there, and you give us your coins, and we, according to the silver amount, we change it into our internal coin and put your metal into the vault.
Yeah.
And then you can trade with the others, which are on that harbor, and make trade, and you trade it in the books of the bank
with the receipts.
Yeah, they not with the receipts, they with the accounts. They rewrote the accounts, and they always had to have the 100% of what they had in the books had in the vault. And it, when Adam Smith, for example, thought about the Bank of Amsterdam, he said, "I'm not so sure if they have all the money in the cellar," but at that time when he wrote that, they had it. But later they gave the loans out to the Dutch East Indian Company, which was normally forbidden. And when people found that out, they
lent money. They lent money.
They lent money from their vault, real coins. They removed them from the vault and gave them to the East Indian Company, and this was their end.
So there was nothing back in their loans.
There was not. They in the books they still wrote as if they had 100% in the vaults, but they only had 50% in the vault.
Right. So okay. So was that the beginning of fractional reserve?
No. It was a fraction. Yeah, it was fraction reserve, but not the real intentional beginning.
Right.
But they were not allowed to do it. And there was a bank in Hamburg, the Hamburg Bank. They did it the same way. And when the Napoleon forces conquered Hamburg, and they said, "Give us the key to your cellar," and they took the money, the coins out, and they counted it. The Hamburg people had a little more than they had in the books. They had 105%.
What?
Yeah, they had more. They had more money in the cellar than they had in the books.
Why did they do that?
No. It was unintentionally. They didn't know it. No.
They didn't know how much money they had in their vaults.
Yeah, exactly. They didn't know exactly how much money they had. There was I don't know what the fault was, but there was more money than in the books, and the French took all the money away, and this was a catastrophe for the Hamburg merchants. But they immediately started with a new bank, with new deposits. And later, when Napoleon was defeated, they had to pay back some of the which they robbed there.
Right.
But after this, the center moved to London, and the Bank of England was the first bank which was kind of a central bank, which had the privilege of giving banknotes. And everybody every sovereign was afraid of the fate which John Law gave to France. He invented, or not invented, he issued paper money in France, and he kept issuing and printing it. And in the end, it was a catastrophe for all these who had these assignaten. They called assignaten. And to prevent this, the English king he said, no, only the Bank of England had the privilege to print notes. And so the other banks in the city of London said, we could make business with banknotes, and we are not allowed to do so. So let's give people checkbooks.
Right.
Let people deliver their coins and deposit them with us, and then we give them this checkbook, and they write the sum and pay with this, and then the recipient can come and claim the coins. Mm-hmm. So and somebody who's being paid by checks, he went to his bank and said, here are the checks I received, get me the money. Mm-hmm. So they had the walking clerks. They walked through London, and in the earlier days, it was not very much money which they had, but the more people had checkbooks, the more money they had to carry from bank to bank.
Yeah,
and
these were called the bank runners, weren't they?
The bank runners? No, the walking clerks. They were the walking clerks.
Walking clerks.
I don't know whether somebody called them bank runners, but I think working clerks is what I know.
I heard a story that they met together in a coffee shop in the city of London, and they decided to try to save their shoe leather.
Yeah, or avoid the weather.
I don't know if it's true. I don't know if it's true.
This is the saga. They met into a room, and when the CEOs of the banks got notice of this, they were upset. And on the other day, they said, "Good idea. We rent you a room," and then they rent them a room in a house, and later built the clearinghouse, the London Clearinghouse. Right. And the London Clearinghouse was a boy club of all these CEOs. There was no legal restrictions on that. There were no legal.
So it was a physical building.
It was then it became a physical building. Yes.
The London Clearinghouse, yeah.
The London Clearinghouse, and it was hidden. Nobody really knew where it was and what it was when he was in front of it. It was kind of, and not even the Bank of England was member of the Clearinghouse. So it was a boys' club of the private banks, and right. They started to meet there more early in the morning at 9 o'clock. They came with the checks they had for the other banks, and took every bank had a table, and all the clerks put the checks for the banks on the respective table, and when they came back, they found the checks the others had for them, and then they collected and checked the sums, and went back to their bank, because they had to check whether the deposits are enough to pay the check. Yeah, somebody could have written a larger number on his check than he had deposits, and then they wouldn't pay. Mm-hmm. So the check system was a perfect system for banks because they had no risk. Uh-huh. They refused to pay it. So and then they checked which checks they paid, and then went back in the afternoon with the money for the other banks. And first they paid bilaterally, and then they said, okay, we have to pay money, and we also get money. This was different every day. So we don't have to, since we get money, we don't have to take money there. We use that money which we get to pay the others. Yeah. This was the second state. And when finally, after 60 years or so,
and when was this realization?
It started 1775, and they did it by coins, and then they even used banknotes, and in I think it was in 1850 or so, they used their accounts on the Bank of England. Even when the Bank of England was not a member there, they used their accounts and made it without coins and without notes. And when the Bank of England was member, they opened an account for the clearinghouse, which was zero at the beginning of the day. And everybody who had to pay something paid it on that account. And the Bank of England distributed to the ones who had to receive money on that day. And it was zero again.
So this is the beginning of banks clearing between themselves.
Yeah, it was banks clearing between themselves, and they cleared the claims they had, the mutual claims they had. And I have the statistics of 1830 something I want to show.
Yeah.
You see, it's during the year 1839, and you see what on every day what was coming in, what had to be paid, and how much they needed to pay it, and what the percentage of them. So they needed only below 10% or something, 10%, below 10% of liquidity to make this business happen. And this is kind of a number. 7%.
Drastically reduced the need for coins and real money.
Yeah. And all of Europe said the English have so few gold, and they have so large an amount of business which they take. How do they do it?
So the rest of Europe didn't know how they did it.
They couldn't know it, but they wondered how it functioned. And for example, the French, they had lots of more gold. And there was one time when even the English had to borrow gold from France for their wars.
Do you have any links to more information about this, to the beginnings of clearing between banks?
Yes, I have links. There is one guy whose name is Ernest Seyd.
How do we spell that?
S-E-Y-D.
Okay.
Ernest S-E-Y-D. I sent you the link. And he wrote this book in English and immediately let it translate in Germany, because he wanted that Germany also started a clearinghouse.
So this is why the City of London got such a head start.
Yeah.
And why the British Empire sort of, I guess, grew faster than other.
And it was it was the fleet with which they had, and they also had an East Indian Company, and they had the colonies, and there's a lot of things coming together to hold them at the top of the trade.
How did they do the clearing? How did they work out the clearing before the age of computers?
Well, with a pencil and paper. Yeah, in the clearinghouse there were the tables of all the banks, and there was one supervisor who got all the bills, the slips where the totals are drawn, and he knew which bank owes which bank how much.
Did he have lots of people working for him to do the sums?
Yeah, this was done by the clerks of the bank.
Right.
The former walking clerks.
The former walking clerks, so no longer walking.
No longer walking, but accounting. And I even have a quote when in New York, the first Remington adding machines were entered, and this must be a hellish sound in that in the clearinghouse when they all did the counting.
Like a Japanese pachinko parlor.
Yeah, maybe.
And the banks do this electronically now.
Yeah, they do the electronically, and not only for one day. They do it in chunks of 1 hour or something like that.
Yeah. So, anything else in that you want to talk about in the history of credit clearing?
Yeah, the thing when the banks noticed that they only need 7% of what the customers deposited, they said, we could give people a checkbook which didn't deposit anything.
Yeah.
And earn from that too.
Yeah.
And this is the start, the real start of fractional reserve.
And when was this?
I don't know.
Roughly.
Roughly 1830 or something like that.
Right.
So
that wasn't. So if there was nothing at all required, then that's not fractional reserve banking. That's zero reserve banking.
No, zero reserve looking at the account. Fractional reserve looking at the vault of the bank.
Right. Okay. I think okay.
and this is how the money economy, which essentially is a barter economy, moved from money economy to credit economy.
Yeah.
And credit economy is the means which could finance all these things which they did at that time, for example, railways.
Yeah.
They couldn't have financed railways with coins.
Right, right.
No way of thinking about that.
Okay, okay. How does the history of credit clearing relate to what's happening today? Are there lessons we can learn?
Well, the lessons we can learn is since money is no more not is more a claim against somebody, we can create money ourselves. We can agree that I can claim 50 euros for you because I scratched your back.
Yeah.
Your back, and we are free to do that. And if I say, okay, I don't insist on you paying me now, let's collect what I do to others and so on, and others do to me. And at the end of the month, look what network has evolved, and then clear the network. Yeah. We won't need that much cash.
So Mutual Credit Services are working with Local Loop Northwest in Lancaster to build a credit clearing scheme in Lancashire. Do you know of any other examples?
There was in Switzerland, there was the WIR.
Yes.
WIR Bank, which was WIR.
Yes, was.
Well, yeah, they're still there.
Yeah.
But the first impulse came from crisis, the big economic crisis in the 20s.
In the 19th,
and they said, okay, we don't have enough money, but we can write down what we owe each other, and they did it. And today they are a normal bank, a normal community bank, because the supervising authorities wanted them to be a bank, and they allow them to be a bank.
Right.
And this is something, but a credit clearing thing like the in Lancaster, I have no example.
Right. Okay.
Further example.
But it's applicable anywhere in the world, isn't it?
Yeah, sure. As long as you can have math and have an Excel spreadsheet is enough.
Yeah.
To do this, you don't need big computers with big algorithms, graphic theory algorithms to find loops. It's enough to have a table, Excel table, and you have the total of the lines is what the line owner owes to the others, and the total of the columns is what they owe to him, and the difference says does he have to pay something or not.
Yeah. Yeah, if it's good enough for the banks, it's good enough for us.
Yeah, and it's time that civil society takes advantage of this instrument.
Yeah.
And I only to mention it, when I started to think about this matrix, which solves the problem, I wrote to the German supervisor agency, the BaFin, and asked them whether I need a banking license for this, and they answered, no, you didn't. It's only information which you just transfer. Yeah. There's no money in that.
There's no money.
And in the end, money is information about the rights I have to claim. So this process of coming into the credit economy frees people to be the sovereign of money also. Yeah, I don't oppose to central banks being sovereign of the currency. This is fine. But beside that, without disturbing it, people can say we are the sovereign also. And when I give the credit to somebody, I can generate money with that.
Hans-Florian, it's been lovely talking with you.
I think it was all my pleasure. Thank you for your
much.
questions. Bye-bye.
Cheers, Hans-Florian.
Cheers.
Bye-bye.